Breaking news, breaking news. So Trump has announced a 50-year mortgage or proposal. He posted this on Truth Social, and it was this post where he compared himself to FDR, President Franklin D. Roosevelt, and he did the 30-year mortgage. And now Trump is saying, let's have a 50-year mortgage, and is working on a proposal to have that. MAGA has lost their mind over this. Most people that work in the industry have lost their mind thinking about how much debt and how much interest would be created if people took a 50-year mortgage. Well, I'm going to break this down for you because there is a lot of negativity around a 50-year mortgage. And yes, there are definitely some valid points, but I'm going to share with you what actually a 50-year mortgage would look like, because this is not what people are saying at all. They are so wrong. And Noel Randall is going to tell you the truth. Let's go.
Noel. Yeah, she can fix that. You gotta get it done, no, you need to do it better. Well, she can fix that. Yeah, she can fix that. Investment to get back, trying to get a big stack. She can fix that. Let's fix that.
Okay, so let's get right into it. Most of what I'm going to be talking to you about is based on a lot of the principles from the Grow Your Wealth Bootcamp. You can get your tickets to the Grow Your Wealth Bootcamp right now for a very, very affordable price. All right, let's get into this. Most of us know that homes are not very affordable right now, and that is a big problem in the United States, that homes are very unaffordable. The average person, especially younger persons, 35 and under, they really have a small chance of being able to afford a home. You have to make a lot of money nowadays in order to qualify for the average home, being that the average home price is nearly $450,000. That's the median price of a home in the United States. And so you have to make over nearly $100,000 to be able to afford a mortgage, with their interest rates being what they are right now, which is about 6.5%. So Donald Trump over the weekend posted on a Truth Social post or X post, I forget what it was, about a 50-year mortgage. And this is not the first time that we have had a mortgage longer than 30 years. And people are losing their minds. The MAGA base is going crazy. They're saying Donald Trump is trying to make homes, make forever mortgages. That was one of the things that was said. People are talking about, wait a minute. When you break down the numbers, you're going to be paying so much in interest. And some of that stuff is true. So let me break down some of the truths of what's being said, and stay to the end, because I'm going to tell you something that nobody else is telling you about this 50-year mortgage thing. We already know that real estate is the number one way to wealth. Real estate offers equity, it offers appreciation, and if you use your properties as rental properties, it can even provide cash flow for you. And most people's first home is their first rental property, because you will buy a home usually, and then you will upgrade to another home, and then make the home that you live in, your primary residence, into an investment property, or cash out to get a bigger home. So for many, many years, starting in the 1940s, the 30-year mortgage became very, very popular. That is a mortgage that is amortized over 360 months. And of all of the different numbers, that has been like the most popular thing. And it became really popularized in the 1950s, when you had all of the veterans and the GI Bill, and people were buying homes in record numbers, and more Americans were able to create wealth by owning real estate, having these stable neighborhoods that they lived in, and then passing this wealth down to their children. And many of us in certain groups, we really weren't able to participate in the 1950s. And now we're seeing home ownership is a way to wealth for many people, and it has a lot of advantages. But the 30-year mortgage has been a staple in home ownership in the United States since the 1950s, and it has continued as the primary mortgage that most people take out, is a 30-year term, again, amortized over 360 months. Now, of course, there is a 15-year mortgage, 20-year mortgage, even a 25-year mortgage, but most people, 90% of all home buyers, choose a 30-year mortgage. Here's a stat right here to prove that. So that means almost all people have a 30-year mortgage. However, most people do not pay 360 payments. They do not just make one payment for 30 years and then pay off the house. Most people sell the home or refinance the home into a lower term. Different things are done in the course of a mortgage. So very, very few people ever make 360 payments on their mortgage. So the idea of a 50-year mortgage where you could then stretch out the payments over 50 years, okay, instead of 30 years, which again is 360 months. However, after the 2008 mortgage collapse, the one I talk about where I ended up in my parents' basement, where there was this big recession, the housing market crashed, there was what's called qualified mortgages, okay, QM. They created all of these laws through Dodd-Frank, and a lot of the housing laws were changed so that subprime lending could not overcome the housing market and take it down again, because there were mortgages that were 40 years that were introduced during the subprime era in 2001 and 2005. I, in fact, worked at a subprime mortgage lender at the time, and I approved and gave out a lot of 40-year mortgages. Okay. Not only were there a lot of ARMs, which would mean that they would have a fixed rate for 2 years. It would be called what we called a 228, where it was fixed for 2 years. And then the next 28 years, it was on an adjustable rate. Then another option was a 327, which means the rate was fixed for 3 years. And then for the other 27 years, you would have a fluctuating rate, an adjustable rate. Those were ARMs, 228s, 327s. Those were very popular. And then in the subprime mortgage industry, there were 40-year mortgage terms, but they were 480 months divided by 30 years. So it was still a 30-year mortgage technically, because it would balloon after 30 years. So the payments were based on a 40-year term. So they were lower than a 30-year mortgage, but it ballooned after 30 years. This is the thing that no one's talking about, because when we talk about 50-year mortgages, we already know that if you just amortize the whole thing out over 50 years, you are going to be paying so much in interest. Let me explain that part. Wait, real quick. Give me your opinion below about 50-year mortgages. I just want to know your opinion. I'm teaching you this, but I also want to know what you think so we can have a conversation about it. Take, for example, if you took out a $450,000 mortgage. Again, the median price for a home in America right now is around $450,000. So if you took out a mortgage for $450,000 and it was amortized over 30 years with a 6.25 interest rate, your payment would be $2,771 approximately. Now, if you took that same interest rate and you spread it out over 50 years, the payment would go down. If you kept that same interest rate of 6.25 on a $450,000 loan, your payment would be $2,452. And again, this is directly from this article right here. So it's only of a savings of about $300 per month. But for many people, that is enough. They would say, yes, I would take $300 less per month. But then, of course, when you do the math, you have paid way more in interest on that 50-year mortgage, because mortgages are front loaded with interest. Let me explain. So on the 30-year mortgage at the $450,000, when you were all said and done, you have paid $547,000 in interest. That is quite a bit. So if you think about it, you paid over $1 million, because you add the $450,000 with the $547,000 in interest. Basically, over time, if you spread it out over the whole 360 months, you paid over $1 million. Well, if you did a 50-year mortgage, the interest would balloon to over $1.02 million. So instead of $547,000 in interest, you paid $1.02 million in interest. So that is incredible. You paid 87% more in interest by doing a 30-year term versus a 50-year term. And this is the thing that everybody is talking about and going crazy. Like, wait a minute, you would be paying so much in interest. But let's be real for just a second. As I mentioned when I started this video, most people never make 360 payments on their mortgage. Even though it is amortized over 360 months, no one actually pays 360 payments. Very few people. And on average, it's 12 and a half, 13 years. Either the person sells the home or they refinance it into another mortgage and then lower the interest rate or pull some cash out, pull some of the equity out, different things like that. So very, very few mortgages ever see it to that 360th payment. The same thing would happen with the 50-year mortgage. But let's go back to subprime mortgages. Remember, I told you when I was approving mortgages in the 2000s, we did 40-year mortgages, and they were very, very popular because it did offer a lower payment versus a 30-year mortgage. However, it would balloon after 30 years because lenders already know that that's kind of the sweet spot where the savings come in. Once you actually extend it out 40 years and 50 years, the savings, as you can see, is very minimal. On the example that I gave you, it was only about a $300 difference in the mortgage payment on a $450,000 mortgage at a 6.25 interest rate. There was only about a $300 difference in the payment on a 30-year mortgage versus a 50-year mortgage. And that was assuming that the interest rates were the same. Now, we already know that when the term is lower, the interest rate is lower, which is why 15-year mortgages are awesome, but most people can't afford the payments. But the interest rates on 15-year mortgages are much lower than on 30-year mortgages. Additionally, if the term is longer, the interest rate is higher. So on a 30-year mortgage, obviously the interest rate is higher than a 15-year mortgage. You can easily assume on a 40 or 50-year mortgage, the interest rate is going to be higher than on a 30-year mortgage and much, much higher than on a 15-year mortgage. So with all of that said, we already know the lower the term, the lower the interest rate. The longer the term, the higher the interest rate. That's because of the risk. You had the payment out there much longer. The banks have to take on more risk, so they usually charge you more interest. So everyone is going crazy about Trump proposing this 50-year mortgage under the assumption that you are going to be paying that mortgage for 50 years, when statistically speaking, that is not true. Additionally, when we have 40-year mortgages, we still amortize them over 30 years. So I assume that actually would be the case. They would do a 50-year mortgage, so the payments are lower, but the mortgage itself would have a balloon payment due after 30 years. And most people would never really see that balloon because they would most likely refinance out of the mortgage before it ever came to that, or pay the home off or sell the home, because most people do not even live in the homes 30, 40, and 50 years. So the thought behind it of affordability is not incorrect. It would actually make homes more affordable. But as a consequence, most likely housing prices would increase. So if Trump actually wanted to go forward with this idea, he would, one, have to make interest rates the same, like the 50-year mortgage interest rate would at the very minimum have to be the same as the 30-year mortgage. Most likely it's going to balloon after 30 years. So that whole nonsense about forever mortgages and we would be paying for 50 years. Most people aren't going to pay their mortgage for 50 years. That's not even the idea. He is not totally crazy with this 50-year mortgage because we already have 40-year mortgages and people took them and that worked out for them. But there is one thing that I have to say. Bill Pulte is behind this whole thing. So you guys have heard of Pulte Homes. They are a major home builder in the United States. They are up there with Ryland Homes. They're up there with D.R. Horton. They're up there with Lennar Homes. These are like your mid-level home builders. Remember, Noelle Randall is not just an educated YouTuber with 2 master's degrees. I'm literally a licensed real estate broker in the state of Florida, and I've had my real estate license on and off since 2006. So I know about mid-level builders, and Bill Pulte is the grandson of the founder of Pulte Homes. So this whole idea comes from the home builder side. Okay, this comes from that industry. And what Bill Pulte, being in the ear of the president, is trying to do is trying to get more people to buy new homes. Okay, they're building homes. They're not going to be going down on their prices. They don't want to reduce their profitability. So what they have to do is figure out a way for consumers to buy these homes and make it affordable for them. And spreading out the term of the mortgage is an easy idea to do that. Now, we already know that Pulte Homes, they're, again, a mid-level builder. I have nothing negative to say about them or D.R. Horton or any of these other builders, but they all have these different promotions that they're trying to run to make people buy their homes. For example, D.R. Horton is offering 1% mortgages. That's the big thing. It's catching everybody's eye that you can get a 1% interest rate on their mortgage for 3 years or 5 years. And basically all they're doing is buying down the rate, which is something that has existed the entire time that I've been licensed. And even before that, you could always buy down the interest rate on your mortgage. Okay. And what D.R. Horton is doing is taking some of the incentives and some of the real estate commissions and things like that they have built into the price of the home. They're just taking that and saying, okay, we'll buy down the rate for 3 years, 4 years, whatever they're offering, and give you a 1% interest rate to make the home more affordable for you. That's what you'll be qualified off of. And then, of course, the rate is going to go back up. This is very reminiscent of the subprime mortgages. Remember, I explained to you what the most popular mortgages in the subprime world were. They were ARMs, that 228, that 327, or that 480 over 360, that 40-year mortgage term. Those were the most popular mortgages out there at the time. And People ate them up, obviously, and it created a crash because homes were more affordable, the home prices went up like crazy. So whenever they do these things to lower the interest rates, or they lengthen the term so that the home is more affordable for you, it just causes a case where the sellers increase their price and the prices of homes just keep going up and up and up. And then this whole big circle just takes over and over and over again. So the bottom line to it is this. Will 50-year mortgages reduce your mortgage payments? Yes. Will people take them up? I think so. Will this actually come to fruition? I think so. I think the easy thing that they're going to do is offer the 50-year mortgage. And like I said, they're going to make it balloon after 30 years, just because that really works for the banking system. And it would offer you a lower payment and make homes more affordable and get more buyers into the market. I don't think it's that crazy of an idea. Everybody's losing their mind about these 50-year mortgages and like, you're going to just pay so much interest. However, we don't know what the future holds. And most people, like I said, refinance out of those mortgages anyway. And the key for most of us is we need to just get into housing. We need to start being owners, because once you're actually in a home and you have a mortgage on it, you actually have more power than you think, way more power than a renter. You know that you can get evicted in 10, 11 days, 1 month of missing a rent payment, and you are out on the street. That is highly, highly unlikely with a mortgage. You literally get months that you get to be behind on your mortgage before they're starting the foreclosure process. And the foreclosure process, in many cases, you can drag that out for months. I've seen people drag it out for over a year. So the bottom line is certain groups, you know what I'm talking about? We still need to get in this housing game. I'm so proud of my bonus daughter. She's 29 years old. She just bought a house with her husband. I am very proud, because many young people under 30 are saying they're not buying houses and they're not having kids. Well, those things are very important to our economy. And for certain groups, we have to continue working on building our wealth. We cannot be deterred by housing prices being up and interest rates being high, and even offering these creative mortgages. We can't be afraid of them. In many cases, we have to educate ourselves and still buy a house and buy homes. That is still our number one mission, because we need to become owners. We need to own land. We need to own housing. We need to have real estate. We need to have businesses. We need to get power in this country. And the only way to power is with ownership. So at this time, what would have to happen in order for a 50-year mortgage to happen? Well, Donald Trump would actually have to go to Congress and actually change the law. Like I said, after the 2008 crash, they created what's called qualified mortgages, QM loans. And one of the caveats is you cannot have a mortgage term over 30 years. So he would have to go to Congress to change that law. That would be the first thing that would have to happen. The second thing that would have to happen is education about this. So not just Noelle telling you. So taking out a 50-year mortgage, of course, that's going to have more risk. You are going to be paying a lot more interest, especially in those first years. And you're going to have to get out of that mortgage in the first 10 years in order for you to have any equity in your home. Because again, you're paying a monthly payment that's mostly going towards interest, and you're paying very little towards principal. So you're actually gaining equity at a much slower rate than you would on a 30-year mortgage, but especially if you took out a 15-year mortgage. But for most people, the affordability is the thing. So we have to find out a way to make homes more affordable, and a 50-year mortgage could make homes and mortgages more affordable. You just have to be more savvy about how you're getting out of that mortgage and use it as a tool just to get the house, and then figure out how to make more money, increase your income, pay down those mortgage payments, put payments towards the principal, and get out of that mortgage. But I do see that this is something that could happen. Like I said, Bill Pulte is the chairman of the Federal Housing Financing Association. He's also the chairman on Fannie Mae and Freddie Mac. This is a very powerful person that is in the ear of the president. Bill Pulte is the grandson of the founder of Pulte Homes. So he's going to be in the ear about new homes, making new homes more affordable, and pitching ideas that he thinks is going to make his company sell more houses and make them more profitable. So that's the key of what's going on right here. Basically, this is Bill Pulte pulling the strings and trying to offer out something so that they can sell more homes. But what's in it for us? Well, it could make homes more affordable for you. And do I think you should shy away from a 50-year mortgage? It depends. That is not just a straight up no. Okay. I know there are men out here. I've watched some of the videos and they're like, absolutely not. Well, they have a much different legacy than some of the other people, maybe different than you. You may be in a situation where your family doesn't have a long history of owning homes. And maybe you're the first homeowner in your family or the second homeowner. And we need to create a legacy, a generation of home ownership and owning in neighborhoods and owning land. So we have to get in where we can fit in. And in many cases, we just can't be the fools in this situation and take out this 50-year mortgage and then make just the minimum payments like you do with a credit card or something like that. No, you can actually turn a 50-year mortgage into owning a lot of properties, especially if you work on making sure you have good credit and you work on business credit. That leads me to what I'm going to tell you about the Grow Your Wealth Bootcamp. You need to come to the Grow Your Wealth Bootcamp and get your tickets today. This is something where I teach about getting business credit and business financing and even using HELOCs to get more real estate. One of the easiest ways to wealth is by owning real estate, especially as investments and investment properties. Most people do not have any wealth because they don't own very many assets. And the more assets that you can get, the richer you will become. And so you should be working on your wealth building plan. And at the Grow Your Wealth Bootcamp, I will teach you all of it. We'll teach you how to get your credit in order, how to get business credit, how to get business funding in a matter of days, not years, how to use those fundings to get assets, income generating assets. In fact, the same way that I have to build my wealth. You do not have to remain in a situation where you're in poverty or you're a poor person in America. You can start to climb, and you have to get the information and the knowledge because there is tons of funding out there. It's just not available to the masses, and there's not any TV commercials or radio commercials teaching you how to build your wealth. But Noelle Randall and her team of experts will teach you all of this in just one day, and the tickets are super affordable. So get your tickets right now at Grow Your Wealth Bootcamp, and I want to see you at the next bootcamp so you can learn how to build your business credit, get money for your business, and use that money to buy income generating assets and use whatever tools and resources and creative financing is out there for you to stick to your plan. You are just not going to be an uneducated fool and get into these loans that you have no idea about. You're going to do your research, you're going to learn, and you're going to be with a network of very successful people that use banks and lenders to fund our dreams and get ourselves to the next level. The Grow Your Wealth Bootcamp is an amazing way to do that in just one day. So get your tickets right now. Why? Because I want to make sure that you have all of the knowledge, all of the tools, and all of the resources that you need to be successful. This is Noelle, to your success. Hey, all right, make sure you subscribe to this channel and make sure you share this video with anyone that can share it, because this is something that no one is saying what I am saying. I assure you, everybody's taking this negative approach to it, and I'm telling you, certain groups, you know what I'm talking about, we can benefit from this. Let's see how that works. All right, next video, watch this.